What is going on, guys? Almost in 2026. Glad to see the back of 2025, the year of gold, the year of precious metals with silver running, and of course, the year that the dollar has gone into one of its weakest, on track to have its weakest drop in a decade. Now, of course, there's a plan. And in my opinion, I do believe with the Dixie about to drop further and Trump getting his wishes, perhaps below 90, right? In the long term or in the medium term, it seems to me the obvious move of gold and silver's parabolic move. By the way, silver's move doesn't tend to last very long on the top, but we are talking about flight to safety, a cheaper dollar, and the fact that this year the dollar has now officially been well over or on track to be, the first time in a decade, we're going to have the weakest ever performance of the dollar. So we're going to have a look at some of the historical relationship. Crypto bros and crypto family right now is out of sentiment. Weaker dollar, precious metals, guess what? Risk assets. Fed actually improving the current macroeconomic conditions. Specifically early next year to mid next year, perhaps when Powell leaves office. But there is no way that you should be quitting crypto for good. Okay, if we get a pump in the next couple of weeks, months, whatever, take profit, get out, secure what you can, but get back into the market. Now, we've also seen a massive pressure from prediction markets that could hit $1 trillion. So if you think of the traditional degen, and the CFTC has now loosened its grip on this side of things, this is going to be a minus for crypto. Now, if there's crypto projects in the future, of course, we've seen within our own kind of sphere, we've seen the likes of Polymarkets and other things, but this is an area to pay attention to from a blockchain standpoint. But what you can't ignore, if we're kind of obviously doing an annual overlook of what 2026 is going to be looking like, the prediction markets that are integrated into the UFC, they're integrated into CNN, MSNBC, BBC, polling and everything. So everybody can go and click. And that gambling addiction is going to boom. Now, of course, within blockchain, within crypto, you need to keep your eyes on that. But this has also been a reason why pretty much altcoins have been dead in 2025. There's a gravestone there to say that alts, we need to rethink the plan. And this is the plan that I'm absolutely now in the hands of mastering. And I hope you can actually write that with me, because this will make a significant improvement in the way you see cryptocurrencies moving forward. We talked about the likes of Casper and these other, projects in a manner that allows us to look at the picture holistically, because not all projects are going to survive. Today we looked at, I dropped in a report about Zebek, for example, and about decentralization. So the technology itself is going to improve, but a lot of players will die. So this has been a massive, massive impact in terms of prediction markets. But if we look at the DXY, right, what we can see here is a further kind of like drop out of this trend here, and we can actually see the DXY moving further down. And that is exactly what Trump wants. And the reason why he wants this is because if you look at, for example, the way this works, guys, it's not that Trump wakes up one morning, but historically, this goes back to Janet Yellen. And of course, if you look back at what Yellen has done over her time, failure for to recognize currency manipulation. This was kind of a free hand to, of course, to the yuan, to the Chinese government, in my opinion. And of course, in a Senate hearing, this all went down back in 2024. Perhaps this was one of the reasons why we had such a kind of awful couple of years, in the sense that the United States has become way less competitive. It is an economy. It's a service economy. Now, of course, this was the Treasury Department back then led by Yellen. Now it's a completely different ball, with Trump wanting a weaker dollar. And a weaker dollar, which we'll talk about in a minute, is good for risk assets. Of course, there's caveats, there's macro headwinds, but you're looking at the kind of way down the line here. You know, most market will be reactionary to some of the things that's going on right now. So the $1 trillion trade surplus and America's $1 trillion trade deficit, right? America imports more than it produces. China exports more than it consumes and imports. And the Chinese, Trump has been holding this back, this idea of weakening the dollar, because there's also a peg issue with the yuan. So there's going to be a lot of moving parts. And essentially, liquidity doesn't show up overnight. It can take 3, 6, 8, 9 months. And that's not even looking at this from the Fed angle. So Beijing's $1 trillion trade surplus leads advisors to advocate strengthening yuan to promote imports. Now, if you strengthen your currency, right, and they're saying, look, to promote imports, that means obviously they will increase their purchasing power, right? If they devalue their currency, they are, you know, you'd better go to that shop because the sweets are costing less, right? Devaluing the dollar or the yuan there. So this is why it's such an important thing, what's going on right now. So for you to understand, the resistant, Trump said he came from China and it came from China and Japan, and all they want to have is a weak currency. He said, adding that the tariffs he has imposed this year, it would be worth much more with rebalancing exchange rate. So the idea is very complex, but this leads us into Bitcoin's price, right? So we are seeing a very clear pattern with Bitcoin. What's been happening, it's been ranging. And yes, of course, you know, all of the bearish sentiment is out there and we have macro headwinds. Plus, we have been manipulated heavy. But if you see this purple line here, this had the highest volume and that came on the October 20 candle. So still up till today, that seems our yearly low so far for Bitcoin. Not yearly low, the recent range low, I should say. So what happens here? Gold's been rocketing because hence weaker dollar. Trump's been openly talking about this. Perhaps we were a bit too slow to see this, but everybody should have seen this. Now, if you look at the DXY, right? The Dixie is, you know, if you look at this, we are seeing a crate, like once you zoom out, you see this whole entire downtrend for the Dixie, but I can see an additional 8 to 9% drop from where we are now. Now, of course, right now, the Dixie is at 98. And if you look at historic 2021, DX levels were around this 88 to about 89. That's historic low. 94, 95 is also pretty decent. But if we take a measurement from here, and we kind of then zoom into this area, what you would notice, this whole entire movement here, there is still some way to go. Now, of course, there is a longer term trend here. So even if we're being picky here and say this trend, you know, we got a 3-touch trend here. So clearly that is a trend line, right? So what we have is this trend. Can we see a reaction? And this is the level to watch for the DXY, in my opinion, at all costs, because the DXY going below this, you know, smashing 97 could see a reasonable move to the downside. So in my opinion, 2026 offers more optimism and less pessimism for me personally. The year that I'm afraid things may possibly get tough, it could be 2027 and maybe 2028 when Trump leaves office. And of course, maybe if there is a change of guard at the White House as well. You've got to take everything into consideration. But I'm in it to win it. I'm here for the long term. And in my opinion, when I look at the DXY and the current trend, you know, it is not, there's nothing too exciting about silver or gold in the long term. Yes, they are precious metals, but Bitcoin's tokenomics, Bitcoin's precise 2025 performance. And every time, by the way, every time Bitcoin ends with a negative yearly candle, the following year, it's almost always pretty positive. So what I would say is prediction markets in 2025 have absolutely taken degens away from the space, or retail. Retail don't want to wait for 4-year bullshit holding and staking and all of that nonsense, right? A lot of this is driven by day-to-day, minute-to-minute, second-to-second activity. We're seeing the worst performance for the DXY in a decade. Now, how does this all tie up into crypto? So weaker dollar, precious metals, Bitcoin, and US Treasuries. That is the link. The dollar's role is the global currency, right? It's the global financial system. So I'm going to try and skip through this piece of research I've put together here. Historical links. Gold and silver are priced in dollars globally. Denominator, of course, they're going to go up if the value of the dollar is going to fall, right? That's a straightforward one. When the dollar weakens, it takes more dollars to buy the same ounce of metal, Bitcoin, whatever you're buying. I don't know, cigarettes, whatever you're buying, doesn't matter. Buyers find more precious metals. Foreign buyers find precious metals cheaper in their local currency, i.e. the yuan. Central banks historically increase gold reserves during the dollar weakness. And this has happened, of course, during this period of 2022 to 2025. So record central bank gold buying, and this is in response to the post-COVID era. Historical precedents. After the Plaza Accord in 1985, where the G5 agreed to a weaker dollar, gold rallied significantly. Now over here, it is purely Trump and the Chinese, right? And of course, we've got Fed minutes out today. This is giving us a complete temperature of what the Fed is doing in terms of consensus next year. But you've got key characters like Stephen Miran and, of course, Jay Powell and others there. And the Fed is divided. You know, you can see stocks are down slightly. But it goes back to this Trump Chinese, what they want. And, of course, the Chinese welcoming it. And you may be thinking, what's going on here? Because, of course, you clearly see that Trump wants to weaken the dollar, and the Chinese are saying, yes, please do that. The picture is way more complex. Us degens need to understand that this is perhaps, along with the Bitcoin dominance chart, which is stuck at about 59%, any spike will further weaken altcoins, has to be taken into consideration. So Bitcoin's relationship to the Dixie, 2016 to 2018, DXY went from 103 to 89. Bitcoin rallied from $800 into $18,000. November 2020, that was, forget that. 2022 bear market. The DIX, of course, we saw FTX. We saw massive rate hikes in 2022. And as a result, we did see the strongest 20-year move for the DXY, and it surged to 114, and that is because of the whole macroeconomic situation at the time, and Bitcoin went to 15,000 and a half. And of course, current setup, DXY down, the worst performance since 1973, perhaps a decade. 73 is way more than that, but the worst performance since that time. Bitcoin gained 13% in the same period, but overall, Bitcoin is lagging these bad boys. These other gigantic charts like silver, gold, and others. And DXY currently trading up, 6.5 points below the 200 moving day average. We did look at the chart anyway. M2, look, central banks, M2 will be a talking point at some point. Yes, global liquidity is rising, but there's a huge lag. So we're not going to talk about that and really, waste too much time in it. The expansion, macro headwinds, money doesn't flood into the markets all in one go. Okay, so what we're seeing, other things we're seeing here in summary. So Feds normally keep rates high to defend the dollar. Well, they've been cutting rates, right? And that's why there is no chance next year, early anyway, the first meeting of the year, there is absolutely very tiny slither that they will cut rates. Weaker dollar, cut rates makes refinancing cheaper. Buy risk assets. Risk assets naturally get inflated. Okay. And finally, I'll go beyond all of this and I will summarize with this. So we are seeing conditions right now that will signal a move towards Bitcoin. So fall in DXY, bullish for gold, silver, and of course, gold and silver have done what they've done. So what's the next thing now? In my opinion, the natural trade for next year will be in the digital assets, in particularly Bitcoin. We don't want to talk about micro caps. Stick to safety assets first, and that will lead the market. Global M2 expanding, bullish assets, especially Bitcoin, with a lag of whatever the period is. Treasury refinancing pressure, Mar-a-Lago style devaluation, extremely bullish for hard assets. Treasury market dislocation, initially bearish, risk off, then extremely bullish, flight to alternatives. So the macro setup, all three conditions are going to align at some point. Weaker dollar, expanding liquidity, and a massive treasury refinancing pressure. If we get those, guys, look, at the end of the day, we're not going to talk about, we're not going to talk about crypto without talking about altcoins. But if you actually look at altcoins, this is safe, right? The chart is absolutely dog shit, right? So the minimum risk right now, this is Neo Protocol. The minimum risk, just to go and cut your garden, run your, drive your car, go to the gym, dollar cost average to what you believe in. Because these assets here, if we're even in a bear market, we seem to be breaking into that bear market, and we have been in that bear market for a very long time. Total 3, there's a chart that I always talk about, which is this one. This has never given me any bull market signs. Perhaps this chart has clearly indicated that we may still end up tapping a ratio that can trigger, or it may even be the end of this kind of cycle that we've known. We don't know really what we're heading into. Another chart, the Russell 2000, which is breaking up and not with enough volatility, and it's either above it or below it. This is our direct correlation for the total 2. So whatever you do, guys, stick around. Do not go to the casino too much because you will get burnt. Watch out for leverage. I wish you a fantastic 2026. We're going to do more content like this. But understand, when you see this, which is the, Dixie, when you see silver doing some stupid thing like that, silver has never stayed at the top for long because it moves. It was manipulated through Christmas Day. Yesterday's sell-off was insane. Today's been bought back up. But you have to remember, this asset will come down, and the natural rotation here will be into Bitcoin, in my opinion. Of course, the dollar value is different, but silver is now, and precious metals are the indicators to what's likely to come to Bitcoin. So there you have it, guys. Smash a like, share the content. God bless you all. I'll catch you on the next one.